South Africa's consumer protection framework today. First, I'll just take you through the regulatory structure in South Africa. Look at the Consumer Protection Act, which is the overarching framework for consumer. I'll just run through it because it's for all goods and services, not just including finance and banking. And then we look at specifically for each of these: banking, credit, advisory, intermediary services, insurance, pension, and capital markets. The two main regulators in South Africa in terms of financial regulatory structure are South African Reserve Bank, which regulates the facilitating banking sector, and the Financial Services Board, which regulates non-banking financial institutions, insurance, capital markets, and pensions. And in addition, there is the National Credit Regulator, which is set up by the Act called National Credit Act, that regulates the credit industry. So there were a lot of studies that were done, and it was observed that although the structure in South Africa is modern and effective, there needs to be reforms to ensure that prudential regulation, market conduct regulations are strengthened. And in 2008, there was a policy document that came out, which kind of put down lots of policies for strengthening the financial regulation structure. And the main policy shift was shifting towards the Twin Peaks model, which we've seen, which could be an vision in Australia. And in that, the prudential regulation is kept separate from the conduct of business. So there are three pillars, which is prudential regulation, conduct of business, and coordination. So the Council of Financial Regulators kind of coordinates. It has members of key members of financial regulators and other stakeholders. And Financial Stability Committee looks after financial stability. That will have members from SARB, FSC, and National Treasury. No, this in 3 years, they've given a transition time of 3 years. So, 2000, no, the policy document came out in Feb 2011. So, yeah, they're putting out, Consumer Protection Act, I'll just quickly go over it. So, yeah, it provides the overarching framework for all other laws providing consumer protection. It came into effect on 1st of April. It applies to consumers and small businesses whose annual turnover is below 2 million.
What do you mean by natural persons?
Natural persons, child.
Natural persons would include both individuals as well as corporations, or needs. I don't know. So legal persons would include individuals, corporations, etc. Natural persons may refer to just all.
And so goods are those which are marketed for human consumption. Services is anything that one person does which will directly or indirectly benefit another person. In terms of enforcement, there's a National Consumer Commission which the CPA creates, which investigates the customer complaints, and there's a tribunal which adjudicates any violations of the Act. And any offences, there's a fine of up to 1 million or 10% of 1 million. Key features: language. The Act does not specify that any particular official language should be used. It also says that it should be the language that should be used should be aimed at the person the product is given. And cooling off period is basically how much time you can return the good without charging a fee. Product liability is so they have something. So if you use if a customer has some damage because of some unsafe product, this Act kind of makes it the supplier's liability. So the consumer needn't prove that it is because of the fault of the supplier that the damage has happened. It's the supplier's duty to prove that it was not his fault. That's that is marketing, direct marketing through SMS. So consumer can basically opt out and say that and then if you put junk mail, I don't want junk mail on your post office, they cannot come and drop any kind of flyers or anything. Disclosure, consumers have the right to know how much and intermediately get the commission. Yeah, that's consumer protection. That's only if they ask for it. Yeah. For banking.
So, back to your in terms of enforcement, so there is an enforcement mechanism for any consumer product.
Yeah.
So, what is the sort of hierarchy? What do you do to have
I'm going through dispute resolution for each of banking. For banking, the consumer protection framework mainly relies on self-regulation voluntary codes. There's something called the Banking Association South Africa, which is an industry body representing all the registered banks. It lays out the code of banking practices, which is a set of commitments that the bank makes to their clients. It's a non-legislative code, and members of the Banking Association South Africa have agreed to adhere to it on a voluntary basis. It sets out minimum standards like disclosure. There is a huge set of like things like terms and conditions of the contract, key features of products and services, information on how to issue a check, transfer money, lots of things that the bank should provide to the customer. Conduct, the client can expect the bank to market and approve credit responsibly, give clients notice of closure, branches, ATMs, etc. So yeah, there are a list of things like that. And there's dispute resolution. So member banks have, all member banks must have an internal dispute resolution procedure in place. Yes, I just remember. So basically, if you have a complaint, you first go to the bank or the branch unit. There, the member bank has to have this internal resolution process in place, and that will include acknowledging your complaint. You should let them know how much time it's going to take to complaint be redressed. If it's not redressed, then they can go to the bank's central complaints department, and you need to provide full details of the complaint, summary of it, reference number, contact details, and a suggestion as to what you think should be done for it to be, what you think is the way it should be redressed. Even after this, if you're not satisfied, you can go to the Ombudsman for Banking Services. There's something called the Financial Services Ombudsman Scheme Act, which is an act which gives recognition to voluntary ombudsmen. So this is again, it was actually set up by the association, but it got recognition from FSOSI. So so ombudsmen, what they do is they get once they get the complaint, they'll send a document. Once you approach the OBS, they put out a summary and go to the bank and say, give them details of the complaint, and they give them some time to redress it with the client. If they don't respond in a particular set of time, or if the customer is not satisfied, he can then the OBS does an investigation and then puts out a brief assessment of saying this is how, with a recommendation as to this is how it should be. Recommendation, and then then they have they give an mediation process where if it's successful, then the case is closed. Otherwise, there is they put out a determination which is binding on the bank but not on the customer. So the customer can go to court.
The time frame is not.
It's all there. I haven't looked at. I don't think I have it.
So like it's not, it doesn't vary.
Yeah, there's a fixed set of time. Like if the customer is unsatisfied with the bank in 20 days, he can go to the OBS. Yeah, they have the bank says there's set of times for each
For
of these.
each time.
Yeah, each of them. For credit, that act which I mentioned, the National Credit Act, which was set up in 2005.
That's not just anything for
Yeah.
Is that the Supreme Court or even would you?
Yeah, so the National Credit.
And also, I don't remember whether it's in your Australia that to go to court it would have to be interpretation of the law and not actually the case. So, in order to go to court from the ombudsman, can the customer only go to the types of if there is an interpretation of the law, or anyway if it is not happy with the
Yes, the National Credit Act applies to credit agreements with all consumers and to entities such as companies, partnerships and trusts whose annual turnover is below 1 million. It applies to most credit products where payment is deferred and a charge, interest fee is payable on the outstanding balance. So, overdraft, credit cards, personal loans, key features of the Act. So it lays down fundamental consumer rights. This is like right to know why you've been denied credit, right to information, right? Protection from aggressive advertising. This kind of prohibits again direct marketing through SMS or telemarketing. You have. And you can then if you say do not disturb, you're not allowed to approach the client. Then protection from over-indebtedness. The credit provider, as per the Act, the credit provider has to do a proper assessment of the client's repayment capacity and stuff. And if the client is over-indebted, they also have debt counselors which can conduct inquiries and Then in case of dispute resolution, now you first you try and solve it with the credit provider. If not, you can complain to the National Credit Regulator. And if the credit regulator is not able to solve it, he can take it to the consumer tribunal. And this is a one-member tribunal. If he's not happy with it, he can appeal with a 3-member tribunal. Then the credit provider again has to meet the tribunal to start with determination to tribunal credit provider, but the client can go to court.
So these tribunals, they come under the Act.
Yeah, they've been put out. They have been established as part of the National Credit Act.
Yeah, but your ombudsman in the banking space was created.
It's created by the association. The association called industry body basically, and the FSOS Act, which came after this was set up, that kind of gives recognition to these voluntary ombuds. So that has given recognition to most of the ombuds. Like there are many ombuds. So for long-term insurance, short-term insurance, for banking, and for one more ombud, basically, this act is given recognition.
So the ombudsmen are all there.
Yeah. Advisory and intermediary services. So this purpose is set an act for the Financial Advisory and Intermediary Services Act, set up in 2002. It was to provide consumer protection in terms of financial products and to enhance the integrity of South African financial services industry. It lays down standards for market conduct for both financial service providers as well as reference effective. There are.
When you say advisor and intermediary, does South Africa have, in terms of the market development, they have a specialized advisor?
Yeah, yes, in every financial service provider, the financial services provider, they provide.
They have separate advisors, or is advisory a part of?
There are separate advisors.
And when you say intermediary, what is it called?
There's any aspects that giving advice by a person to the client or on behalf of the product supplier, resulting in the client entering into or offering to enter into a transaction with such a financial product with a product supplier, or with a view to do the following with respect to the financial product.
So basically, a product seller is a.
So it has a set of fit and proper requirements for both financial service providers as well as representatives. Honesty and integrity completed has a set of qualifications they must have and operational ability. Their organization as such should have access to communication facilities, appropriate money laundering control.
So only if you have those. You are
given license only if you have it. Then the Act also reports the industry to follow a code of business conduct, and that has disclosure of information to clients, record keeping requirements, advertising, experience, things like that. Code is not binding. Yeah, this is the way. So you first go to the FSP, and the Act says that you should, each FSP which gets the license should have a complaint, financial advisory and community services complaint resolution department. If you're not satisfied, you go to the FPIS ombudsman, and then there's an appeal court which is set up by the Financial Services Board. You can appeal to them. Then insurance, you have short-term and long-term insurance. Short-term is like general insurance. Long-term is health and life. With regard to consumer protection in this sector, it's mainly they have a set of policyholder protection rules which are issued in the separate acts, and key features of that: direct marketing. Again, you might see that there is much wider set of rules for direct marketers. Direct marketer must, when rendering direct marketing to a policy holder, furnish the policy holder with its contact details, nature of benefits of the policy holder, charges and fees to be levied, commission and fees payable to the direct marketer with associated with the policy, etc. And each call must be voice recorded, and if needed, the client should be provided with a copy. Disclosures must be made in writing. This is all for direct marketers. For cancellation of policy, insurer must comply with the request to cancel the policy not later than 60 days. Blank form, like when you sign a form and you're asked to, somebody else fills up the information later, that's time. You can't do that. Policy summary, insurer must give the insurer the summaries provided to the policy holder within 60 days. And then for dispute resolution, there's for long-term insurance, there's ombudsman for long-term insurance and ombudsman for short-term insurance. These are also like voluntary ombuds schemes in banking. They've also got approval from they recognize under FS1. With pensions, basically the Act, I've just looked at specific sections of the Act which kind of are associated with protection of fund members. So there's one section which talks of that the benefits of are fully funded, benefits of funds which are registered under the Act should be fully funded, and if they're not, to formulate and implement plans to become fully funded. There are provisions designed to protect members upon winding up. These include requirement that the minimum benefits of members be provided for, failing which the shortfall must be funded by any remaining participating employer. There's a section which protects members' savings from claims by other creditors, etc. And there are such disclosure requirements which are put up under the Act. For dispute resolution, this Act has set out the pension fund adjudicator. So this is how the process will be. And for lastly, securities, these are three forms of market abuse which are prohibited: insider trading, market manipulation, and false reporting. So anyone who's found guilty of any of these things has to pay a fine of 50 million or imprisonment. There's also a body called the Directorate of Market Abuse, which is set up by the Financial Services Board, which investigates.
So in that case, in your security fund, do you have an ombudsman?
Yeah, there is an ombudsman which is not recognized. Yeah. I think complaints will first go to this directorate, and I'm not very sure about I haven't looked at the ombudsman.